Good morning, Bitcoiners. Hello, and welcome back to another edition of your Bitcoin economic calendar. Today is Monday, February 22nd, and we have a lot to cover in this week's episode. First, we're going to be covering how Bitcoin is tracking investors' inflation expectations by looking at the correlation between Bitcoin and the yield on the US 10-year Treasury note. We're also going to talk about the implications of the first Bitcoin ETF in North America entering the market. We're going to talk about how that may affect market dynamics going forward. And lastly, on a similar note, we're going to talk about Bitcoin crossing the very important $1 trillion market capitalization threshold. We're going to be also covering what the downstream implications of that could be in the near future. So without further ado, onwards to our analysis. So starting out with Bitcoin, as we usually do, we see that we had another record-breaking week for Bitcoin, reaching a new all-time high, closing last week at $57,489, up 18.09%. The week saw many positive developments, including the launch of the first Bitcoin ETF in Canada and breaching the $1 trillion in market capitalization threshold. And that happened around right around the time when Bitcoin crossed the $53,700 mark, which is coincidentally trading around the same levels this morning. We're going to be talking about the potential implications of both of those events in our What's Ahead section later today. Separately in the market, we also saw that here's a headline for Bitcoin crossing the $1 trillion milestone for the first time. This happened last week. But elsewhere in the markets, we also saw that Elon Musk started speaking out about Bitcoin again in a response to a tweet from Bloomberg. Here's the tweet from Bloomberg. And the response from Musk, you can see right below in the back of your screen. In the response, he says that Tesla's action is not directly reflective of my opinion. Having some Bitcoin, which is simply a less dumb form of liquid cash, of liquidity than cash, is adventurous enough for an S&P 500 company. Elon himself has come a long way in a very short time, as not too long ago he was asking openly to Michael Saylor on Twitter whether it was practical to buy Bitcoin in large amounts. Now, beyond the Twitter chatter, Musk's purchase has also prompted a flurry of mainstream media articles that are feeding the Bitcoin is digital gold narrative. As an example, let's take a look at the recent article that was published by the CBC in Canada, which says why cryptocurrency might be on its way to becoming the new gold. This is just an example. If you Google Bitcoin versus gold on Google, in the news section, you'll see a flurry of articles that are basically from CBC to Forbes and many other mainstream media articles, and all of them, or most of them, reference the Elon Musk purchase. Now, going back to the graphs and taking a view from the macro world, let's take a look at some other telling signs that Bitcoin is tracking investor inflation expectations. So what I'm going to put in the back of my screen right now is the 10-year or the yield on the US 10-year Treasury note. On top of that, we're going to compare this to the price of Bitcoin, as we can see from below. Now, at first glance, it looks like they're not too correlated, but if you actually zoom in a little more, you see that both are very much directionally correlated. This is on the weekly, so let's zoom in on the daily so you can see more of the recent correlation. So in here, you can see very clearly how they are directionally correlated. Now, this is very meaningful because, as you can see, obviously, although they are correlated, Bitcoin's moves happen with are much more amplified, meaning that the direction is the same, but the actual size or dimension of the move is actually bigger on the side of Bitcoin, which makes a lot of sense because it's a much smaller market. So why is this important? Well, it's important because the yield on the 10-year note is widely perceived as an indication of the return that investors demand to protect themselves from inflation. So we're going to be diving deeper into the 10-year note in the following section. And we're also going to be talking about what we're seeing in the Bitcoin futures and options markets, as well as the funding rates for perpetual swaps in our What's Ahead section later today. Moving over to the S&P 500, we see that the index took a breather last week, closing down 0.71% lower at 3,906 points. This is an interesting dynamic, or we saw an interesting dynamic last week, because even though the S&P was down, we see that the Dow Jones Industrial made a new all-time high of its own last week, and so did the NASDAQ. So very interesting that these two other indices made all new all-time highs, where the S&P 500 was not able to do so. There's a very interesting dynamic also at play with the yield in the 10-year Treasury note that we were previously discussing. So as you can see here, last week, the yield on the 10-year Treasury note spiked 12.08%. That's a very big spike. And basically the interest on that note is up to 1.35%. We've been talking about here in the economic calendar how this was at just 1.20 last week, and that there was a potential that it could keep climbing if inflation expectations continue to mount. So as we've mentioned before, this yield on this note is used as a proxy for corporate borrowing costs and inflation, which can lead to headwinds in equities if they continue to rise, particularly in the companies that have large debt components to service. So something to keep in mind. Looking ahead to the week, we see that the stimulus package from President Biden that's currently sitting at $1.9 trillion is heading to Congress this week, where it is expected to pass, but it could face some headwinds in the Senate, where the Democrats would need every single member in the Senate to vote for the Democratic Party. However, there are 2 Democratic senators that have voiced their opposition to one particular element of the plan, which is raising the minimum wage to $15 per hour. For reference, the current minimum wage in the US is at $7.25 per hour. So meaning this proposed increase would more than double the current rate between now and 2025. So something interesting to consider, because this conversation has certainly fueled the potential, or the narrative for potential future inflation, which has led to the yield on the 10-year note spiking and pushed the dollar index slightly lower for the week. We can just take a quick look here at the dollar index for the prior week, and we can see also that it's heading lower again this morning. So to touch on the dollar for a second, I guess let's leave this chart open for a second. There are experienced foreign exchange professionals like John Glover and others in the macro world like Lynn Alden that continue to point out the potential for a multi-year down cycle on the US dollar. We saw just before this, as we were discussing on the 10-year note, what this continued drop on the dollar could do, as it would probably push the yield on the 10-year note even higher. And for reference, here's a note that shows essentially the down cycles, and this is courtesy of John Glover. Basically, he's showing that the dollar, or the US dollar, tends to work on multi-year up and down cycles, and he's basically pointing out that this current down cycle is at the very early stages. So something to keep an eye on as we move further into this year. Moving over to gold, we see that a falling dollar and a spiking 10-year Treasury note yield were not enough to push gold higher last week. It was down 2.18% at $1,783 per ounce. And the signs continue to mount that Bitcoin is soaking the air out of the room in the inflationary hedge side of portfolios. Looking at the graph, we'll take a look at some articles essentially to reflect that just in a minute. But looking at the graph, we see that the chart feels heavy. The gold has broken a key support level, as we can see here in the around the 1785 mark, and the next support level that is somewhat visible on the chart is around here in the 1725 range, which represents about a further 3% drop from current levels. We'll have to see if the potential for the new stimulus bill passing the vote on the House this week is enough, or is able to jolt some life back into gold. However, at this rate, the potential for that seems low. To reflect some of the growing narrative around gold versus Bitcoin, I just wanted to flag this article from the India Economic Times, which again, India being one of the most important gold owner or one of the most important places in the world for gold ownership, it's very interesting to see these types of articles emerge. Basically, this article is titled, "Is Bitcoin a better bet than gold? The debate is getting louder." So this is more around the type of articles or news pieces that continues to feed that narrative. So to keep an eye out, to watch the relative performance between Bitcoin and gold. Moving on to the DeFi, FTX DeFi index, there's not much news to report on DeFi last front, but that did not stop the FTX DeFi index from reaching a new all-time high, up 10.98% for the period, with Ethereum also having a very stellar week, up 7.27% for the week, closing at 1,935. Really strong week, but unable to close over that very important $2,000 level. A positive sign in the Ethereum markets, and I'm just going to pop open this recent article, is that, one second, here we go, is the performance of the CME futures, the Ethereum futures and the CME during their first week of trading, which was actually quite positive. We saw that the first week of trading of the Ethereum futures saw an average traded volume of around $34 million in contracts, which equates to about $160 million for the weekly period. Very importantly, the volume levels that we saw on the first day were sustained throughout the week. This is a sign of not just pent-up initial demand, but ongoing usage of the instrument by market participants. Another very interesting nugget from this data was that 27% of the volume came from participants outside of the US. So something to keep an eye on, as there seems to be significant appetite for these futures from market participants all over. Moving over to the Bitcoin mining difficulty commentary, we saw that the most recent adjustment that came in this Friday, or this past Friday, took us to a new all-time high in difficulty of 21.72 terahashes, up 1.35% for that last epoch, or difficulty epoch. Hash rate has been stable since the adjustment, with no major change yet projected for the next adjustment. The mempool is still at relatively high levels, as it tends to be during significant price moves, and the high fee environment will likely continue for as long as Bitcoin's price remains volatile. For some context, the block reward for each new block is currently at 6.25 Bitcoin, and the average fees for the last 24 hours in Bitcoin are averaging an 0.83 Bitcoin in addition to that. So that's over 7 Bitcoin in rewards for miners in each block, which gets produced roughly every 10 minutes. So as always, we leave you with what's ahead for the week. There were two massive market events this week that will have long-term implications. First, the first Bitcoin ETF in North America began trading in the Canadian market. ETFs have a faster redemption and creation mechanism than closed funds like GBTC and 3iQ. This means that their prices can trade closer to the underlying asset. Investors looking for price exposure to an asset tend to prefer whatever is tracking that asset's price the closest. As an example, the GBTC premium to spot price in Bitcoin, which historically has traded at around 17%, closed last week in the single digits. Second, the second very important market event is that Bitcoin reached the $1 trillion market capitalization. This is very meaningful, as there are some market participants, certain market participants, such as pensions and endowment funds, that cannot invest in asset classes that are under $1 trillion in market capitalization, meaning Bitcoin now ticks the investment box of the largest class of capital allocators in the world. They will dabble in sooner than later. Zooming into the week ahead, we're heading into contract expiration week for the February Bitcoin future contracts, as well as Bitcoin option contracts on Friday, the 26th. Expect volatility, as tends to be in expiration week. On the CME futures contracts front, as of Friday's close, we were seeing some selling pressure in the far end of the curve, with the July contract trading at $59,000, just below the June contract, which was trading at $60,000. Interestingly, on the options front, we're seeing 1,400 contracts open interest in the $60,000 contract and twice as much in the $64,000 contract. This makes that $60,000 to $64,000 price range an interesting one to watch leading into Friday. Diving into the 10-year note yield, or the 10-year US Treasury note yield, analysts from Bank of America think the yield on the note can still go higher before it starts causing headwinds in the equity markets. They reference 1.75% as a key level. from the current 1.35%. That represents about 23% more to go. And during 2021, Bitcoin has had a beta correlation with the 10-year Treasury note of 1.67. This means that a 23% move on the 10-year yield would equate to around a 38% move for Bitcoin. For context, that would be the $78,000 to $80,000 price range for Bitcoin. Now, as we inch closer into the 6-month mark after MicroStrategy's first Bitcoin purchase, and with them recently announcing an oversubscribed bond offering for $1.05 billion at 0% interest to buy more Bitcoin last week, the potential for large corporate announcements in the weeks and months to come increases by the day. On the perpetual swaps front and the perpetual swaps funding rates front, Bitcoin and Ethereum perpetual swap funding rates are about 30% over their 30-day moving averages. This means there is strong potential for volatility. We're starting to see some of that already at play this morning. Mix that in with contract expiration week, and we can likely expect a lot of volatility in the days to come. As always, we'll keep you posted with any relevant news throughout the week, right here in the economic calendar and through our social media at Hodl with Ledin. If you don't yet have a Ledin account, I welcome you to check out ledin.io and learn how you can start earning 6.1% APY in your Bitcoin and 12.25% in your USDC. If you learned something today or if you like it, I invite you to share it, subscribe it, and leave us any questions in the comments section. Thank you, everybody. Have an excellent week and see you next time.